All right, ladies and gentlemen, boys and girls, this is just a quick recap. If you haven't seen it, check out the video I posted a week ago, or a bit over a week ago, Monday the 13th, where they basically foreshadowed exactly what's happened to a T. So the short version really is I ran through a whole lot of reasons why this was a top, from kind of rolling over to a little break that had happened here, particularly in the Aussie market you saw, to the Dow, a few other things, but I also went through what's been going here with a big seller on the 17th and 18th day sessions in the US, who then packs up their bags at the end of the 18th, and on the 19th it comes bouncing back. And that is exactly what's happened on the Friday session and today. There's people out there who've got various theories around it being with options expiry, which it is not. Options expiry is the third Friday. I think I said Wednesday by accident the other day. Third Friday of every month. This is not the third Friday of every month. Sometimes it is, but this action happens. The selling is on the 17th and 18th, good business days. The seller is then gone, comes back on the 19th. It's not a flash crash. These little crashes, as some people call them, they're not flash crashes. They are a big order in the market. That is clearly, to me, like a large fund manager that has their meeting on the 15th of each month. They speak their trades on the 16th. The execution happens the 17th, 18th. They're out, and that's why it comes back on the 19th. It's not about selling it down to the 50 EMA, right? That's just, I think that's just like rubbish, right? Sometimes it hits it, sometimes it doesn't. Things come back to moving averages for a reason. I mean, they're essentially like mean reverting. It's not related to option strikes and option roll-off. That's just ridiculous conspiracy theories of sort of GameStop and Tesla traders. So what's been happening, you can see here, I've literally nailed it, tracked this down to like, the hour, right? Hours, and you can see quite clearly that, when as soon as the session stops on the 18th, so this says the 19th for him here because this is like Australian time, right? So it's a close on the 18th. As soon as that happens, it can roll for business days there. It's off, right? It really is off, and it goes for the 2 days beforehand, which I've kind of shown in previous charts. And today, the last 2 days, has done exactly the same thing. And as I've foreshadowed, the difference this time though is because the selling, as I expected, which I said would take it down 2 to 3%, which is exactly what it did, right? This selling, that was like the 2.9. This selling these 2 days was a bit less, but all of it was basically between 2 and 3%, like the selling over the 2 business days, prior to the thing, and that's exactly what's happened here. A little bit larger because of the follow-through, but really that's what it was. It was between 2 and 3%. So they've done it exactly as expected. But of course, it's broken these technical levels, and so the market is in a bit of a dilemma. So the big seller has gone, that has triggered this, but there is the hangover of, is this a sufficient break of technicals for everyone to start worrying? But certainly it's given people caution for buying back. So it's quite a limbo day today, right? The market's a bit stymied. Because it broke these technical levels, the sellers aren't as keen, and there will be other sellers who've come in, who may be stopping out of positions, or it's hit some levels, like this is a death cross on the 4 hourly. So that's where we are, and this morning on the open, you can see that uncertainty, right, where it has just kind of like can't come out, right. And this is the open here, where it's going to come out, and that's what, 5 a.m. This is a 5-minute run, right? So I guess I should have done it. It actually had an interesting rally just at the close yesterday. Of course, because the seller, they finished their order, right? They don't want to like run it down to the wire like five. Basically, for the last half hour, they kind of last hour of the session, they kind of leave it. They've packed up their bags, they're done, and it's sprung back. So this is the open here, and you can see it's a total, indecision. Went up, down, come back. No one really knows. Very tricky time, a little bit precarious as far as whether it's going to follow through or come back. As for me, I've got no idea, right, which way it's going to go. Absolutely no idea. I squared up. Actually, I squared up my shorts in that last, basically at 5:45, like around about here. I squared it up, set the alarm to wake up at 5:45 Australian time, because I know that's what happens, right? The last half hour, that's when things kind of move. So squared up, so I'm out of the fun and games for this little session. I'm going to sit back and see what eventuates. So that's the S&P. Let's have a quick look at our market. It's come back to the levels exactly as I said. This one is interesting that it's come back to. That's the pre-COVID high, where it came back to, and it just sat there. And again, it's a bit precarious. It's in a bit of no man's land. It's come back up to this range, the top of this range here, right, that level here. Didn't really come back strong enough there, which doesn't surprise me. Whether it comes down and starts breaking this and then gets into that 6,800, that's the target that I've got. It's a tough one. It will really depend on the US. One thing that has bothered me a little bit about, you can see it in both the Australian and the US charts, is the old filling the gap. Both of them have this gap round about here, right? And it's never been filled. And for technical analysts, I know I'm the only one, you kind of look at and you go, this is a bit discomforting, right? Because all these moves here, basically it's come back and kind of filled these gaps, right? So you can see it there, it's come back and it's kind of filled them. These ones here, like it kind of took off, it kind of filled them. Not quite, but very close. It really comes back and fills like all these gaps. It's high as it comes back, goes back, comes back, keeps coming back and fills the gap. This one, it never filled that gap, and there is a very good case in the technical world to say it's going to come back, and it almost by law it just has to fill that gap. Of course, where is that gap? That's that 4,000 level I've been rabbing on about, which is the standard 23 Fibbo for it to come back to. The odds to me are increasing every time I look at it that it's going to come back to fill that gap there. Back to the Aussie. So it's a similar gap there. It's a bit kind of lower, probably a bit more challenging for it to get down to that level, just because of the way the market's kind of stretched further in the US than Australia. I think this one's a bit less likely. That would be a bit more challenging to get to. So that's the Aussie. It's still a bit precarious. To me, it still looks like it's unfolding lower, right? But it has, corrected. This is the futures. It has corrected like 7% there already, which is a reasonable one. We're going to look at the cash market. It's the same thing, back to that pre-COVID high. Makes total sense for it to do that. Is it going to come back and fill in the gap? This gap here, it's tempting. I think this is quite realistic for it to come back to 6850, 6900. This one, tougher work, not out of the question. This one, to me, not quite a no-brainer, but if it breaks like 7200, that's where it's going. The Aussie, so quickly, the Aussie is still continuing its downtrend, unfolding lower. Should take out that arrow. If that's the kiss of death, putting those arrows in there. It's still unfolding lower, and the 10-year bonds, they've been chopping around a little bit, but still kind of recovering in terms of in terms of the prices is still coming off. That's still my target there. So they're the markets. As I said, go back and watch the video that I put of a week ago, which foreshadows all of this. As I said, I've seen a few punters around that have been talking about it. Really, they've been talking out of their fat ones for certainly how they've understood what's been going on here, and that's the main lesson. This is a really good lesson in not so much technical analysis, right? Because these moves aren't technical ones per se. They're actually a market dynamic from the industry. And so that's the lesson. Sometimes, when you look at the price action, it just tells you what's going on in the world. Right? It's not just a technical thing in its own right. You've got to link it back to the world. And this is the link back to the world. Big seller, 17th and 18th, following their meeting. They've done it here again. Who knows if they do it again next month, but you'd kind of say if the market recovers, certainly there's a good chance that they will. And they've done it for 5 months now. Very good chance for the 6 month, particularly if it recovers. Here, it is though other people are going to join in with the selling, which they have, as evidenced by this not bouncing back in the same way that it has on all these subsequent occasions. People have joined in the selling. The technical levels have been broken. The egg's been cracked by the seller, and I think there's a good chance for it to keep unfolding lower. This is the one to watch out for, 42.50. If it closes this gap here, like 44.30, starts closing over that, then new highs are in play. At the moment, to me, I think the odds are still for it to unfold lower, but it is a bit tricky. All right, have a good one. Ciao.